Hey everybody, welcome to the Al Nicoletti Show. My name's Al Nicoletti. I'm an attorney here in Florida, and we are live with the Al Nicoletti Show. We talk to real estate super investors, rising rock stars, movers and shakers, and leaders of clubs in the community that educate, entertain, and inspire all things Florida real estate on how you can take your company to the next level. Well, I have a really special guest on the show tonight, and we're going to talk about some crazy stuff with 1031 exchanges in the real estate world. I have a great guest. He's an attorney. He's been in the game for 40 years. He's got a sheet. He's got a CV, a resume that's incredible. I'll make sure everybody has it. So, you know, the Al Nicoletti Show is live every Wednesday at 8 p.m. I have a Kurt Stein that's going to be on next Monday at 8 p.m. And I got a special guest I'll tell you all about at the end for next Wednesday. But on tonight's episode, I have Stephen A. Wehner, the attorney that is the 1031 exchange guru. And he's been in the business for 40 years. He's got a CES designation too. We're going to ask him about that. Very special designation. But he, in his whole time, he's been a real estate broker and exchanger. He's the managing director of the Liberty 1031 LLC, a qualified intermediary. He's closed more than 15,000 real estate transactions. He's handled over 25,000 exchanges, 1031 exchanges for over 30 years. And he's been quoted. This is a special guest when it comes to being an expert in the industry. He's been quoted in Christian Science, The Monitor, the Physicians Money Digest, the New York Daily News, Accounting Today, Investors Business Daily, Sacramento Business Journal. I'm just reading all the places. This is the kind of guest we have. He's been quoted everywhere. On the Practical Accountant, USA Today, the Wall Street Journal, New York Times, Bloomberg Business Week. And he's been a speaker at over 1,200 events and live audience presentations, from the National Association of Realtors to the National Association of Real Estate Investors and the Net Lease Forum. And there's so many more. He's authored so many books. We could talk about that with him on the show. But on the show today, we're going to talk about what is a 1031 exchange and is it a tax trick? And why would somebody want to do a 1031 exchange? Because there's so many investors that are going to be watching this episode. We're going to make sure it's shared everywhere on the investor groups, on the page. It's just everywhere. And what is the process involved in doing a 1031 exchange? So much to dive in. I got questions. We're going to really get in. So without further ado, welcome to the show, Stephen A. Wehner, Esquire attorney for over 40 years with the CES designation. Thanks for being here, Stephen.
Thank you for having me on.
So there's so much to talk about with 1031s, what it is, why it is, how it is, when it can be used. Is it good? Is it a benefit? What are the advantages? Is it a tax deferment? How do you use it for real estate? There's so many people that would want to know what it is. So before we dive in, just tell everybody who's Stephen A. Wehner. How did you get into this before you were doing the 1031 exchanges? What got you into the 1031 exchanges and where you are today?
Well, it's an embarrassing story. A realtor calls me up, says they want to do a 1031 exchange. I was practicing law as a dirt lawyer like you at the time, and wants to do a 1031 exchange. And I said to them, I'll see them tomorrow. They wanted to have an appointment that day. That night, what do you think I did? I boned up on 1031 exchanges because I didn't remember it. The shame part of it, and there really is a shame part of it, is that when I went to law school, it was a required course to take tax law. And I was petrified of the course. I overstudied and I got the book award. Now, you and I both know that the book award means that you got the highest grade in the course.
Correct.
But I was petrified of the course, so I overstudied. I should have known about Section 1031 exchanges. I was a real estate lawyer. I did not. And as soon as I realized that, wait a second, an investor should be doing a 1031 exchange, or at least know about it, I started telling my clients. Then I started telling other lawyers. But the lawyers cannot be their own qualified intermediary for their own clients, because the qualified intermediary, that's the middleman, that's what we do at Liberty 1031, we have to be completely independent. So as a result, I started telling my competition. And if I wasn't obnoxious at a closing to someone, I would educate them and say, how would you like to have another 5 to 10% more closings in your business and help your clients out? And that's kind of how I got into it. And we built it up to where at one time we were the largest in the industry. So it's been an interesting run.
And now it's just more popular than ever. And you found a niche, right?
I did. And I absolutely love it. And the best part about it is that my clients, when they get done, are happy. You and I both know we can have clients in the office and we could have done a great job and yet they're not happy.
Right.
With us, we're saving them thousands upon hundreds of thousands of dollars in taxes and they're happy and they did it the right way. And as a result, they're able to buy more property at a higher value. So there are advantages and they're all happy. We're happy.
Right. And it's not even just about spending the money and doing all the investing. It's it's about saving money, right? Like, how do you save the money? How do you get the tax deferments? How do you take advantage of the code and do everything with the 1031? So for those that don't know what a 1031 exchange is out there, what is a 1031 exchange and is it a tax trick?
Well, first of all, it's not a tax trick. It's been around for 100 years. We celebrated our 100th birthday literally a couple of months ago. So it's 100 years old. The purpose of it, and then we'll say what it is, but the purpose of it from the tax standpoint, and the reason why Congress has not gotten rid of it all these years, is that the theory is that if someone does a Section 1031 exchange, they're generally going to buy something more expensive than what they just sold. And as a result, that helps the economy grow. And if the economy grows, everybody's happy. So what is a 1031 exchange? It's a vehicle from the section of the 1031 of the Internal Revenue Code that allows an investor, it's got to be an investor. So this cannot be the house you live in. It's got to be an investment property. Very important. So if you're a flipper, if you're a person that's buying something and reselling it a month later, that's not an investor. That's a person who's making a living out of buying and selling homes. There's nothing wrong with that, but they're going to pay ordinary income tax. If you hold the property for a year and 1 day, which is what long-term capital gains is today, you're able to do a Section 1031 exchange. So for example, you could buy a piece of property initially for $100. Now you sell it for $210. You made a $110 profit. Normally you'd have to pay tax on that $110, right? And if it was ordinary income, you'd be paying much higher than if it was long-term capital gains, which is at 20%. So let's just say 20% of that 110, that'd be $22 less that you would have if you had to pay tax. Plus, you have to pay a depreciation recapture tax. If you do a Section 1031 exchange and your intent is to buy another investment property and you follow the timelines or certain timelines, you don't pay any tax today. It's all deferred. So which is better, to have 210 or to have 182, whatever it is? We know it's better to have 210 than the 182, and that allows you to be able to buy more property and generally a higher valued property. Government likes it because you're helping the economy grow. You have not paid any tax at this point, and if you do it right, you'll probably never pay tax. And the government doesn't mind because you're helping the economy grow.
So you can do it for as many investment properties as you want. You cannot do it for your primary residence. And so if you could just elaborate, so if you do it for all your other investment properties, I mean, you could potentially save thousands and thousands of dollars just keeping that tax deferment and that advantage away for quite a while. When does that eventually hit, though? Because deferred means it's going to hit. So what's the deferred part in the 1031?
Well, it may never hit. It may never hit, and here's why. It depends upon how big your estate would be. If your estate is under $5.5 million, or for a couple, that would be $11 million, and you started at nothing and you've built up your assets to where you're, between you and your wife, 11 million, or a single person, 5.5 million, and you died, there's no estate tax. So you're able to use this technique not only to defer paying tax, but you may never pay tax. So there is a major advantage there. The taxpayer themselves are always they should always be looking to buy another investment property. And then the question is, well, what if I wanted to use some of that money to buy myself a Maserati or go around the world or whatever it may be? Well, if you wait a reasonable time, and then the question is, what is a reasonable time? But if you wait a reasonable time, you don't have to, you can refinance that property. So a reasonable time, if you held that investment property and a year later you've refinanced because your circumstances have changed, quote unquote, then you can have that money tax-free and still keep investing. So there are all these different angles by using Section 1031 of the Internal Revenue Code that are an advantage to the investor.
I have to say, you're such a natural on the camera. That's because you've done all these speaking events and you've been a part of all of these seminars. And bro, I could tell, if you have a good guest on that is presentable with their speaking, and you could just tell that you know what you're talking about with this stuff. So why would someone want to do a 1031 exchange? Like, what is the benefit? I mean, obviously the tax deferment and everything, but like, what is that benefit? Why do they want to do the 1031 exchange when it comes to investment properties?
Okay, well, if they don't have to pay tax, they're going to have that much more money to be able to invest in the next investment. So using the example that I just said, 210, you're going to subtract 22 from it, you're at 188. Which is better, 188 or 210? Well, if you have 210, you can buy that much more property. Even if you were leveraging it and we're getting financing, you're going to be able to get that much more financing, buy that much more property. Now, when I gave that example of the $22 as a tax, I didn't include depreciation and capture tax, because if you've owned it for a while, you've been taking depreciation, but Uncle Sam is an Indian giver. And they say, hey, we want some of that money back now that you've sold it. And it's at 25% of whatever you took as depreciation. So if you took $100 of depreciation, Uncle Sam wants 25 back. So now you're no longer at 188. You got to take another 25 off. And now you've got only whatever that figure is, 157, I guess. So what's the difference, 157 or 210? Well, now that it's getting even bigger, you have that much more money to play with than you would have had before. And we haven't even talked about state taxes, because in the state of Florida, we don't have one. But there are only 6 states in the United States that don't have a state tax. All the others, the other 44, have state taxes when you sell a piece of real estate. So those states get hit even worse. And then it depends upon, if you're from New York, you got a state tax, you got a county tax, and you got a city tax if you're in New York City. So you could very well have 13% more in taxes if you were in New York selling a piece of real estate than you would if you were selling a piece of real estate here in the state of Florida. So there are all of these things are deferred. And again, if it's done right, you'll never pay tax.
So tell us, what is the right process? So what is the process to setting up the 1031 exchange? So, right, I don't do any investing myself, but there's so many investors that watch this, listen to the show, that are intrigued by the 1031 exchange and how they can use it to help leverage their real estate business and save on taxes. Because let's be real, nobody really wants to go through all the taxes and what, May 15th? Yeah, not have to pay. Let's just be real. So what is that like?
Let's talk about the process. The taxpayer, which we're going to call the exchanger, I'll either call them the taxpayer or the exchanger, the same party, will sign a contract for selling their investment property. And as long as it qualifies as an investment property, they're going to have a closing. Prior to that closing or simultaneous with that closing, there's certain documentation that's going to be signed. It's the 1031 exchange agreement and other documents that we prepare. Our documents are 34 pages in length on the relinquished side. The relinquished side is the sales side, obviously. And there are only 3 companies that I know of in the country that have had their documents kind of reviewed by IRS and approved them. And we're one of them. Liberty 1031 is proud to say that. But now these documents are signed by the taxpayer exchanger. Guess what? The other side, meaning the buyer, also has to sign 1 page of that document. It's called an assignment. Why? Because the seller is signed using the standard flower bar contract, which is 99% of the time is the one that's used. That contract says that the seller is going to sell, the buyer is going to give money to the seller, and the buyer is then going to get a deed from the seller. Well, that's fine, except that you can't do that in a 1031 exchange. In a 1031 exchange, what happens is the seller sells to the buyer. The buyer does have the money, but the buyer doesn't give that money to the seller. They give the money to the middleman. That's us, the qualified intermediary. Then, and we'll get back to that in a second, but then now the taxpayer is ready to buy. So the taxpayer is ready to buy, they go and they sign a contract to buy, but they don't have any money. Who has their money? Liberty 1031 has their money. So, but that contract says that they're going to give money to close and give to the seller. So an amendment in effect to those contracts have to be done. And that amendment says that the other side, whoever the other side, let's talk about the sales side, that buyer agrees to give the money to Liberty 1031, and the seller signs that same agreement saying, please give that money to Liberty 1031, not to me. Now they're buying. They buy and they have another agreement, same form, same standard flower bar contract that everybody uses. Okay, but the exchanger buyer doesn't have the money. By the way, Mr. Seller, will you accept the money from Liberty 1031? I'm going to sign a form telling Liberty 1031 to give you the money, and Liberty 1031 will give you the money. Will you accept it and then give me the deed? Of course they will. Now, we have a cooperation clause in the standard flower bar contract. It's line number 502 for those of you that are listening, or paragraph N. It's in the back. Who do you think wrote that 27 years ago?
There you go.
So that form has been massaged a little bit by others as time's gone on. But in effect, what it says is both parties agree to cooperate to let, if one of the parties is doing an exchange, to do an exchange. So let's go over the process again so that everyone can understand. Seller sells, buyer has the money, buyer gives the money to Liberty 1031. Seller says, yes, please give it to Liberty 1031. Seller gives the deed to the buyer. We have a transaction. Liberty 1031 has the money. Now the exchanger is a buyer. They buy the property, they sign a contract, but they don't have any money. Liberty 1031 has their money. We're the middleman. The seller in that transaction accepts the money from us, gives the deed to the buyer. The exchanger never touched the money. It was always in our hands. And when they bought, we didn't give it to the exchanger. We gave it to whoever the closing agent is. And by doing that, the exchanger never touched the funds. So IRS says, aha, you didn't have a sale and a purchase. You had an exchange of properties. And that's where that comes from.
And that's the difference in getting the tax issue, correct? It's
right.
not going to the person.
So now they don't pay any tax.
Right. So,
and if they bought something more expensive, they may have a higher basis because they bought something more expensive. So they get a little, if they bought something more expensive in their replacement property, they're going to have more depreciation to take off their income tax return. So it just goes on and on and on and on. I don't know how much time I have, but if you could give me 3 minutes, I'd like to get to, is that okay?
Oh, absolutely.
I'd like to get that first exchange that I talked about that I was not prepared for was I call this my dumb Marine story. Not because he was dumb, but it was just dumb good luck that he found an excellent realtor who knew about 1031s and understood them. And what had happened was he was in the Marine Corps in South Carolina. And after he got out of the Marine Corps, he had a house that he was just off base. And he'd been living in, now he's going to rent it out. He rented it out for a number of years. And now he moves to Miami, Florida. And he ends up working for a company called Ryder Truck Rental. I don't know how many of you have ever heard of Ryder Truck Rental, but it's a big rental truck agency company. And he's working for them, and he gets an offer on the property in South Carolina that he had been a landlord now on. And he goes to his realtor and he says, look, I'm going to get $60,000. Not a lot of money. Remember, this story is a long time ago.
Right.
What can I do with my money? And that realtor says, well, you should be doing a 1031 exchange. You won't pay any tax. And I'm going to find you a property here in Miami for $60,000, which is exactly what he did. He found a duplex for him in an area of Miami called Perrine, Florida. And I think you're familiar with
which is Pinecrest now, right? Yes.
Right? Okay. So Perrine, Florida. And he bought this duplex. And this story is almost 30 years ago. So he buys this duplex in Perrine. And about 2 years later, the property had gone up and it was no longer worth 60, it was worth 90. He refinances it. Remember, he hasn't had a sale. Refinances, not selling. He refinances and got out of the property. He got $50,000. With that $50,000, he goes and he buys a warehouse right next to Miami International Airport for $200,000. He put 25% down. 3 years later, he refinances that warehouse, which is now worth $400,000. He takes $125,000 out and he buys a mini mansion on Old Cutler Road. I don't know if the public knows where that is, but you and I both do,
Yep.
being South Florida people. So buys this mini mansion. 3 years later, he retires. He moves to Honolulu, Hawaii. He sells his home, which he made, this was his mini mansion, he made about $350,000 on it, and he uses a different section of the Internal Revenue Code, which is called Section 121 on your personal residence. If you live in it for 2 years or more, you get $250,000 of your profit free, and if you're a husband and wife, it could be $500,000. So that's what he got there. He got it all free. He sells his warehouse, does another Section 1031 exchange, and buys an office building in Honolulu, Hawaii. He still owns, as far as I know, he still owns the duplex in Perrine. His net worth, the last time I heard the story, last time I talked to him, which is a number of years ago, was just under $4 million.
Wow.
He started with 60. $4 million. Now, it's over a lot of years. I understand that. But he kept doing exchange, exchange, exchange. That's the advantage of being smart or having someone that has the knowledge to be able to help you do a 1031 exchange.
So you can start whenever, right? There's no perfect time to start. Just start, do them.
Start as soon as you can. When you're about to sell. Now, you cannot do a 1031 exchange after you've concluded a sale. It has to be done before, because we at Liberty 1031, as a qualified intermediary, we have to sign the closing statement. We have to have our 1031 documents not only signed by the exchanger, but by the other side. So you can't do that afterward. But it's a fantastic tool, and as long as it's around, any investor should be doing it. I think there was a study out that came out from the University of Florida that said that 78% of the people that do an exchange buy property that's more expensive, and they do it more than once.
And it seems like a great tool that investors can use, right?
It's a wonderful, wonderful tool.
So how long does someone have to hold the investment for? So we're going to talk about qualified intermediary in a second, because that's kind of interesting. That's like a land trustee. But how long do they have to hold the investment for to qualify for the 1031, right? So do you have to hold that property for so long before you get the 1031 exchange? What is that rule?
Okay. So IRS, I have a dispute with IRS on this issue. An investment today is long-term capital gains tax, and that's a year and 1 day. IRS likes to take the position that it's 2 years. And I disagree. And those that have fought IRS, meaning they have the money, they've gone to tax court, they've hired lawyers, blah, blah, blah. And that's the issue. And the taxpayers owned it for more than a year and a day, they win. IRS loses. But most people are afraid to attack or fight IRS, and they give in and they just pay the tax. It's not right, because long-term capital gains is a year and a day. So that's how long you have to own it before you can sell it.
A year and a day.
A year and a day. That's what long-term capital gains is today. When I first started practicing the law, long-term capital gains was 6 months, but now it's a year and a day.
So tell us about this. So you went through the process, which is really interesting. I didn't know that's how a 1031 exchange works, with you being the company, being almost like the middleman in the whole transaction to prevent the IRS tax issue from kicking in, because it's not going to the person personally, it's going to a different company, corporation. So what is the qualified mediary, and can an attorney or you be the qualified intermediary? Your company can do that. So what is that? Well, it's almost like a land trustee, right? It's almost like that.
Well, we are a trustee, for want of a better term. Now, anyone could be a trustee. However, your attorney cannot, because you cannot have anyone that is related to you business-wise be your qualified intermediary. And of course, your attorney obviously is. So that's not a good idea. You want to hire someone that's completely independent, and that's what we are. We are completely independent. It's interesting because I get phone calls all the time with legal issues, and they're asking me for answers. And the first thing I have to tell them is, well, I'm going to give you the answer as I know it, but you can't rely upon it. In fact, I gave a presentation to what I consider to be the best law firm in the state of Florida, and they got an hour of CLE credit when I gave the presentation. And I started my presentation out by saying, how would you like to have your clients happy when the transaction's closed, that they really appreciate what you've done, and you can't give them any legal advice that they can rely upon, and they know that, or financial advice? And everyone raised their hands. Well, that's kind of the situation that I'm in. Yes, my documents have to be right. Yes, I have to know what I'm talking about when it comes to 1031s. Well, we do. But Liberty 1031 cannot give legal advice out. We cannot give financial advice out. We can give you what we believe the answer is, and then what we're going to tell you is, go to your lawyer, go to your CPA, and you have to rely on what they say, because that's who you're going to be relying upon. God forbid you get audited by IRS, not by what we said. Our documents are fine for 1031. That's not the issue. But there are a whole slew of other issues that can come up. And we get this all the time. People asking me for the free legal advice. I give it to them, but again, I have to put that disclaimer.
I know the disclaimer as well. I think I got it even memorized before I do a presentation, right? So
Gotcha.
We're lawyers.
Right.
What are we supposed to do? But the qualified intermediary is the company, right? So
we are a qualified intermediary. So for want of a better term, you're an attorney. This person over here is a CPA. This person over here is a realtor, whatever. We are a qualified intermediary. It's not something you could learn in a month or two. And that's good for my protection because it is a complex item. But I've helped 2 people become qualified intermediaries. And someday when I sell my company, I'm going to have to either train somebody to do this, or hopefully someone will have been trained already to buy our company. But we're independent. We're a qualified trustee handling just the Section 1031 portion of the transaction.
Very unique. It's just,
yep.
It's
it is. There may be 200 companies, 200 companies that really do a volume of this type of business in the country. And when I first started practicing law, as I said, I forgot completely about it, even though I got that grade in tax law. I hadn't heard on any transactions, anyone doing a 1031 exchange. And I'm the one educating my competition on 1031 exchanges, and then got into just doing that.
Well, I can tell you all the knowledge and stuff that you've been putting out and all the education for tonight's show. We definitely have questions, so we'll make sure we save them to the end. But if anybody has questions, make sure you ask. You have Steven live on the show. We'll get to them at the end. We already have a bank of questions we're going to ask you at the end. Anybody can get let's talk about your company. Anybody can get in touch with you to the company to help do this process, right? They could just reach out. We'll make sure they get your contact info at the end. But when do they get in touch with you? Do they get in touch with you at what point? Like, that's what a lot of people would want to know. When do they get you?
They should contact us at least ideally at least 2 to 3 weeks prior to the closing occurring. They don't need to contact us before the closing. And if they're using the standard flower bar contract, trust me, I put in that clause, paragraph N or line 502 in there. So from a cooperation standpoint, the other side has to cooperate. So 2 to 3 weeks is enough time for us to do our documents. But please don't call us the day before. I had someone call today and they're closing at 9 o'clock tomorrow in the morning. It's virtually impossible. It's 34 pages of documents. It's virtually impossible. Even if I had 2 of my exchange coordinators work for 4 hours extra overnight, probably could not get out the documents. But, so.
But Steven,
don't call us the day before.
But Steven, it's the thrill of real estate, right?
Yes, it is. Yes, it is.
Can you do this in 24 hours? Like, can you do this now? No, I get it. I mean,
and we do, and we have an expedite fee. We charge an extra fee when it's like 2 to 3 days before, because we're still having to drop everything. It's not a big fee extra. It's only an extra $250. But, it's not as a punishment. It's that I have to pay my staff overtime to get the documents out. So.
Right. So another question that seems to pertain to 1031 exchanges is, What is like kind property? What is that? How does that play a role? I mean, this is like the foreign terminology. Like you have to be really deep in the niche to know what these words are. Is it on the statutes? There's probably not even a statute that has that. I don't even know if it's statute, but what
Yeah,
is
no, it
like kind?
is.
Oh, okay.
It is. It's called like kind exchanges. So any type of investment property will qualify for any type of investment property. So let's pretend that Al is selling a condominium that he's rented out for the past 6 years. That's a condominium. Your replacement property does not have to be a condominium. It can be any other investment type of real estate, and that will qualify as like kind. So, for example, you could sell that condominium and you could buy raw land. And as long as you're using it as an investment, it will qualify. The same thing, you could go and buy a strip shopping center. You could go and buy the Empire State Building if you had enough money to do it. It's all like kind. It's interesting, something that very technical. I don't know how much time we're going to have, and I don't want to get into the technicality. You say do it, but okay.
I'll say this. Not so often do we have a guest that specializes in 1031 exchanges. So this is really special for the people listening that'll hear this later, that are watching now, that may have more questions. I mean, we're putting questions up on the screen eventually. So please dive in. We love to know the nitty gritty.
Okay. So, well, I'm going to give you something that to me is amazing. And I will tell you that I have given this speech twice to my competition at the National 1031 Convention. And I've given it 1 year, and then 3 years later, they asked me to give it again. So I didn't have to re-prepare. That was the good news. I had it all done. And it's called the bundle of rights theory. Now, you and I both know that when we went to law school, when you're buying a piece of real estate, you're not just buying the land, you're buying certain rights. So you're buying the right to sell it, you're buying the right to live on it or use it, you're buying the right to mortgage it, to get a loan on it, you're buying the rights to use the air above, to drill for oil below, the whole bit, right? So that's a bundle of rights. So my theory was, and by the way, our trade organization meets with IRS about once a year. And we send people to meet with IRS. And I've had the privilege to be able to be on a number of those meetings. And at one of those meetings, I asked this question. If someone had a contract to buy, they didn't own the property, they had a contract to buy, would that be like kind to real estate? They had a contract to buy a piece of real estate, but they didn't own it. The builder hadn't even finished the unit yet, the building yet. And IRS came back and said, yes, because it's part of the bundle of rights. That seller, that owner, that developer in that case, couldn't sell that unit to anybody else because they've already signed their contract rights to that unit in the future, but their contract rights away. So even for like kind, you could have a contract to purchase. The issue is, how long have you owned it, that contract? If you're telling me that you've owned it for 4 months, that's not long enough, because what did we say? We said a year and a day, right?
Yep.
So, but on some of these condominiums, you sign a contract today, the building's not ready for 3.5 years. And you may get tired waiting for that unit to be finished. So here you are a year and a half, 2 years later, and you want to sell it, and you don't want to pay any tax at this point on your gain, and you want to buy another investment, you can do a 1031 exchange. It's amazing. To me, it's absolutely amazing. How many of these have I done? Maybe 2 or 3. You would think that I would be doing hundreds of these.
Right.
But most of the people in the industry are not even aware of it. And when I try to explain it, which I do, as I said, I've given it twice, their eyes go, they're in shock, like, oh my God.
Well, they don't have experts like you in the industry. I mean, you're the guru, the expert of 1031 exchanges. So, I mean, not a lot of people.
I'm not the guru, but thank you for saying that.
Yeah, you are. You're up there. I mean, you're there. I mean, you got all the publications. You're cited everywhere. So a lot of people that need this, especially, let me just explain the audience, right? The audience is investors. There could be realtors. You have a lot of big players in the game, and a lot of the big players don't want to get the tax hits, right? They want to make sure they can get the tax deferments and take the tax advantages. And this is just one of the benefits. And one of the things that's really interesting about Florida is how many investors are buying properties for vacation homes. So I remember you talked about how you can't use the 1031 for the primary residence, and
Well,
you can.
vacation homes are a problem because vacation home is a second home. So that may not qualify as an investment property. Now, if you rented it out, well, the rule is you can't use it for more than 14 days a year or 10% of the time you had it rented out to others, not for rent, rented out. So, for example, if you had that vacation home rented out 200 days a year, well, you could use it yourself for 20 days. That'd be 10%, obviously, of 200. So that's kind of that rule. So vacation homes, they're restrictive items there. And dealing with a related party, which we're not going to get into, we could be here all day with that one. But dealing with related parties is another issue that you have to be careful of. And usually you think of related party, oh, it's my son or my wife or my father or whatever, my mother. But related parties could also be if you owned 25% of a business with someone and now they're selling and you own 25% of a business with them, you're a related party to them. And now you have these restrictions and you can buy from them, but you have to hold that property for 2 years, that property that you bought. And if they were selling and bought something else, they have to hold on for 2 years. And if either violate that, and I'm trying to make it simplified, you have a chance of your 1031 being voided. So you have to be careful when you have a related party also.
Whenever you're talking to lawyers, it can't just be simple. There's got to be a deeper conversation.
It's a very well. It's a subject that you have to be careful, which is the reason why I get people calling me at 866-903-1031. I'll repeat the number again: 866-903-1031, which is our toll-free number. Or I see you have on the screen, you have our website, but my email address is swainer, SWAYNER, at liberty1031.com.
Yeah, we'll make sure we put it there.
He has it on the screen.
Yeah,
good for him.
Right
And we get all different types of questions. It's interesting, and I learn something new each day. We're writing an article on this. This will be what you and I refer to as a law review article, where someone, and we were successful, where someone was in bankruptcy. And because if they did the bankruptcy, they weren't going to be able to be wiped out on some of their debt, as it turns out in this particular situation. And they wanted to do a 1031 exchange with the property that was in the bankruptcy court. Please let us take it out. We'll do a 1031 exchange and we'll finance and we'll pay off these debtors and everybody will be happy. I've never, ever had that situation before. It was successful. This was last year. And as I said, the bankruptcy lawyer and I are working on this article. Which law review it will appear in, I don't know. But it is a complex.
So you just never know. I mean, you'll see new things every day. I see new things every day, but that's the name of the game. That's law, right? Some lawyers never see these things. So big thing that comes up in the investor world and something we were going to talk about is the LLCs. And the question was, if I own the property in an LLC, can I sell interest in my LLC and qualify for a Section 1031 exchange?
Selling an interest in an LLC is selling personal property. Remember, Section 1031 today as it exists is only for real estate. And even though that LLC may own real estate, the selling of an interest in an LLC is selling personal property because you're selling like a stock. Now, the way it should be done is the LLC needs to sell that real estate to whomever. And you don't have an issue. The problem that we come up with a lot is partnerships. And people own interest in LLCs as it's an LLC, but in effect, they have a partnership. They may even have a K-1 filed for each of them. And that becomes an issue when one of the parties wants to sell and the other doesn't, or they both agree to sell, but one wants to do a 1031 exchange and the other doesn't, because it's got to be the same person that sells that buys. So what I tell people, by the way, I usually get $5,000 for this information. But if you were going to buy a piece of property as an investment property, and you have another individual that's going to be a co-owner, I would have two LLCs, one for person A, one for person B. Then when you sell the property, the deed has got to come from LLC A and a deed from LLC B. And by doing that, if B wanted to do a 1031 exchange, they could. It'd still be in LLC B as the buyer of the replacement, and LLC A would get taxed on the income if they weren't going to do a 1031 exchange. That's kind of how you get around that. But you had to plan that way in advance.
So many things. So you can't sell the interest, and eventually you can't.
No.
Gotcha.
No. Can't sell. It's a stock. It's, you and I both know. It's a stock. It's a limited liability company.
Fascinating stuff. You learn things new every day.
Right.
So this was something that we kind of talked about backstage that would probably be a big conversation or more opinion piece prediction, but this whole 1031 exchange has been a topic of conversation in Congress and legislation for years, over 25 years. Where are your thoughts on where it's headed and how it's headed? And give us your take on that. I mean, you've seen this for a long time. Where's the whole game headed in 1031 exchange?
It seems every congressional session, and that's every 2 years, someone comes up with a proposed bill to attack 1031s. And we've been very fortunate over the past 25 years that for all intents and purposes, we still have real estate 1031 exchanges. We presently have another proposal to restrict it in certain ways. My guess is, just based upon the information that I have from our trade organization, which, as you know, I sit on the board of directors of the national board for the past 14 years. And we have the feeling, based upon the information that we have, that we're going to be around, or this is not going to be gone, and it's not going to be changed the way the proposal is. So I hope so. I'll be out of business if not, but we feel pretty secure.
It's here to stay for the most part.
Or at least for the next 4 to 5 years. Yep.
Gotcha. All right. Well, at least we get it from a perspective of somebody that's doing it and that sees it in the chambers and the trade organizations, so that we can get a bigger perspective. I know there's a lot of people watching and that are going to watch that. This seems to be a conversation that comes up in the Facebook pages and what's going to happen. And all of a sudden the whole thing's going to change. So it's good to know that. Stephen, we have some great questions. People have been watching. We have a good crew watching right now. So we'll put up the first question for you, which was Steve Albright, and says, what does it cost ballpark to use Liberty 1031?
And the answer is I can't give you an answer, because it all has to do with the price of the property that's being sold. The more expensive the property, the more expensive our fee. Our insurance goes up. It's just like our malpractice insurance. The more we get, the more we're charged, and we have to be able to reimburse ourselves for what our costs are. The basic, if it's $500,000 or correction, if it's $499,099.99, it's $1,500, which includes the 1031 documentation for the relinquished side and one replacement property. If you were deciding that you wanted to buy more than one replacement property, then it's another $750, because that means we have another set of documents, another set of closing statements, another set of people that we're having to deal with, interact with on that additional property. It's not very expensive to go and save yourself $25,000 to millions of dollars in taxes for a couple $1,000. I mean, it's as my grandfather used to say, it's bumpkus. It's nothing. So it's a volume business. So it's not very expensive.
Can we get the typical lawyer answer? It depends.
Not very expensive. What was the typical lawyer answer?
It depends.
Oh, well, it does. It depends.
It does.
Because it depends upon the size.
Right. Exactly.
Right. I have one in the office right now that's $25 million. Okay?
Wow.
Which is one of the larger ones, right? And so they're paying, I think it's $11,500. I've got a small one, a lot of small ones. That's $350,000. It's $1,500. So, and they're getting the same thing, but our insurance costs go up. So we've got to recoup what it's costing us to.
Right, with costs for sure. So great question, Stephen. Thanks for asking. And then D. Dockery. D, thanks for watching, D. D says, for personal property with the 121 code, do you also have to buy a more expensive house?
Okay, so this is not a Section 1031 question. So D, I'm going to give you an answer, but it's not a Section 1031 question. Section 121, just to refresh everybody's memory, is the personal property, your personal home, your residence that you live in, that you had to live in for at least 2 years. And if you do live there for 2 years, the first 250,000 of your profit, whatever that is, or if you're a married couple, 500,000 is tax-free. There's no deferral, no nothing. Now, I don't know what personal property has to do with it because you're selling a piece of real estate. If you're selling personal property, that's completely set aside and different than your real estate. If it's personal property that doesn't amount to much, I think it's, don't quote me on the figure, but I think it's something like 5% or less of the total value, then it's superfluous. It just goes in the price of the real estate.
Okay. Oh, that's a good answer right there. And then we have GMAC, and G says, do you work in all states throughout the United States?
GMAC, that's a good question. And the answer, first of all, is yes, because it's a federal law. We're talking about U.S. tax. So we just had one in Alaska on Monday. We had one also in Hawaii last week. And then, of course, we have them all over the United States. Also, Guam qualifies, and so does the U.S. Virgin Islands. The next question someone should be asking is, well, what happens if I have foreign property, meaning I've got a piece of property in France, but I'm a U.S. citizen? Can I qualify for a 1031? And the answer is you can, but you can't buy U.S. property as replacement property. It has to be foreign property.
Whoa.
So foreign for foreign, U.S. for U.S.
Can't mix and match.
No.
Interesting. So anywhere in the U.S., you could do this whole thing.
Anywhere. Yeah. I mean, we're having all these people right now. We have this big influx of people from the Northeast and California, too. A lot of people coming from California. And they're selling their investments, not just the homes they're living in, but they're selling their investment properties that they have in those states. And they're coming to Florida, and they're trying to buy stuff in Florida. Well, of course, they're selling in New Jersey. It qualifies. And they're buying in Florida. It's not a problem.
Right.
Replacement property can be anywhere in the United States.
U.S. to U.S. So that's good that everybody knows that. Frank, he asked a second question, follow up right after that. Is a trust considered the same as the LLC in regards to a 1031?
Yes. The answer is yes. Any entity can own a piece of real estate. It could be a trust, and the trust can do a 1031. We've done it over and over and over and over again. So, yeah, that's not a problem.
All right. Well, now we know that you can do that. And then we have Buddy says, as a realtor, what is a good way to promote this and make it a big part of my business?
That's a very smart question. The first thing is every person that you know, when you take a listing, if it's an investment property, the first thing you ought to be doing, if it's a listing, you ought to be asking them, do you know about Section 1031? And you ought to be explaining it, giving them a 5-minute dissertation. You can have them go to our website, www.liberty1031.com, and it will give a better insight than maybe you're going to be able to give. But they should be told at that point, you should be doing a 1031 exchange because you're not going to have to pay any tax. It's going to be deferred, and you may never pay tax. And this way you can go and buy another piece of property, which in your case, for Buddy, means another commission. And that's the reason why I was so upset with myself, because at the time I was practicing law, I was doing 4 to 5 closings a day. I had an unbelievable law practice, and I'm proud of it, but I got rid of it to do 1031s, which is a lot easier, and the people are not mad at you. Even if you did a great job as a lawyer, sometimes they're upset. But when you do a 1031 exchange and you're saving them thousands upon thousands of dollars, they're happy.
All right, next question is Frank. Frank came back, short-term rental. That's what STR is. So how about a vacation home?
Well, a short-term rental, you could rent a piece of property out a zillion times in a year. It doesn't have to be to one individual for a whole year. It's just got to be an investment property. Some people make a lot more money in short-term rentals. As it turns out, I personally sold my home. The home that I'm having built is not ready. And we're now behind at least 3 months from the projected time that I was given originally when I signed my contract. I had to get out of my house. I hate it. It's a double move for me. I had to move into temporary quarters, short-term rental. And when my new house is ready, I'll move from here to but the person that owns this rents to 3, sometimes 4 people a year, all short-term rentals. Not maybe as short-term as Frank was thinking, but those are short-term rentals and not yearly or annually. So they'll qualify. It's an investment property. You're going to be paying income tax on your rental income, so you can show IRS that it's an income-producing property and it's an investment. No problem. But a vacation home, you can only use for up to 14 days a year, or 10% of the amount of time that you had it rented. And so if that's what you're saying, short-term rental, and you only had it rented for 100 days, well, you still get the 14. You don't have to do 10% of 100, which would be 10 days. You do get to use it for the 14.
Very interesting rule. Yeah, you can use it for the investment stuff when you're doing the long-term rentals, the normal rentals, but not with the short-term or the Airbnb.
Yeah, it's not as much to your advantage if you wanted to use it personally. Yep.
Right.
And really, you're not supposed to be using it to enjoy. You're supposed to be there to be fixing it up, to managing it, and making sure that it's okay for your next tenant. But let's be realistic here. That probably doesn't really happen that way.
You never know how it happens. And then we have D says, does a duplex or fourplex qualify for 1031 if you live in one of the units?
Yes, but the unit you live in will not qualify. So this is an interesting question. This would be a split exchange. What you would do, let's use the duplex. You live on one side and you rent the other. Your side, if you owned it for at least 2 years, your side, you would use section 121 on whatever the profit was. And if it was more than your 500,000, if it's a couple, or 250, then you could exchange the proceeds on the other side that was your rental. So same thing, obviously, with a fourplex or whatever. So yes, that's called a split exchange.
So many things. So many things. 1031.
There are.
And if anybody has any more questions, Steven's going to be on here for a little bit longer before we wrap it up. But these are some just golden questions that have been on here. Steven, before we get into some of the interesting stuff in your hobbies, where can people find you? What is the phone number, the email address? Mike, let's make sure we put that up. But what's the email and the phone number so people can reach you if they're interested in getting involved in this and hopefully reaching out to you ahead of time and not 24 hours beforehand when they want to do this?
Well, so our toll-free number is 866-903-1031. I fought for that number. So 866-903-1031. My personal email is SWAYNER, S. Wayner, S for Steve, obviously, but SWayner at liberty1031.com. And if they want at 3:00 in the morning to call, I'm not going to answer the phone, but they certainly could go to the website, www.liberty1031.com, and probably 90 to 95% of their questions will be answered. I write what I refer to as a 1031 information missive about once a month on different subjects having to do with 1031s. We've talked about 15, 20 subjects here today, and those are really good to have. We do print some of them on the website, not all of them, but we do print some of them on the website. And for those people that end up sending us clients or end up being a client, we add them to that missive list or if they're a referral source, because we want them to remember us, obviously.
Sure.
And remember to contact us if they got a question. So it's a good site to go to.
Well, I know a lot of people will have questions about this, and there's so many investors and realtors out there that want to get more into the game. And if hopefully it doesn't go anywhere with the way things are headed. But
let me point out one other thing. And that is, we give seminars to realtors groups. So someone's asked me, well, what type of advantage can I get out of having Steve Wayner come and give a seminar? And the answer is very simple. If you can go out and rent a Holiday Inn conference room, and you could put 100 people in there, And certainly you're going to be able to do that, because whatever your mailing list is, it's going to be more than 100 people. And let's just pretend you got 30 or 40 people. I'd be willing to go. I will make a vacation out of it, and probably stay a night or two in that area. But we do that once or twice a year. Now, I don't do it every week. I used to give, as you're aware, I used to give lectures at the major universities. So, Cornell's had me speak, Harvard has had me speak, University of Texas, University of Florida, etc. But I'm willing to go and give a seminar 2 to 3 times a year that's not drivable from where I live. And I find that overall, I tell the realtors, if they're realtors in the crowd, last one I gave was just a realtor's office. And they had three offices, and they had 175 realtors, and about 70 showed up. And I said to them, well, out of you, I promise that I promise you there'll be at least, if you do what I say, I promise there'll be at least 70 more closings out of this group, which is only one per person average. But not everybody follows what I say and tell people. But those that do, they're the ones that get the 3 to 4 to 5 extra. So I'm sorry, you were going to ask me a question.
No, there's a lot to be said about you can pitch it to 70 people, whether they're going to do it or not is a completely other story. So
right.
So you'll speak and do all that stuff. Well, that's great. But one other thing that was kind of interesting when I was going through your resume is you do all the 1031 exchanges. You've been in the real estate game for so long, but it's also nice to have your own hobby in antiques and art, right? So everybody's got their own thing when it comes to their hobbies. Like, what is that all about? And I know you wanted to share the Andy Warhol story. So I want to make sure we cover that for the episode before we wrap it up.
Okay. So as an attorney, I represented the top art galleries in the state of Florida. They were clients of mine. And we only had 3 in the state at the time. After Art Basel, we've had a flourish of wonderful high-end art galleries, but we didn't have that back in those days. And Andy Warhol, and one of those galleries, and I said I represent them, I didn't know anything about art. And they're trying to sell me art, even though I'm their attorney. I didn't know any better. And I said, well, how can I learn? I don't have a lot of time. So for those of you that really want to learn about art, go get Art News or Art in America. They're 2 magazines. Because that's what they said to me. He said, go get the magazines. I said, I don't have the time to read the articles. And they said, we don't want you to read the articles. What we want you to do is look at the names on the advertisements and look at the advertisements, and tell us what you like. And we don't even want you to come back to us for at least 6 months. And then you can come back to us and say, oh, I like that type of art, or that artist there. And you will learn from doing that. And as a result, one of the art galleries that I represented, and she became like a big sister to me, Dorothy Blau is her name. She's dead now, but she was absolutely wonderful. She represented, if there were 100 top artists in the world, she probably had 20 to 25 of them, that's unbelievable for one gallery to have that type of thing. And one of them was Andy Warhol. And so Andy Warhol is giving a show at the Lowe Art Museum, which is at the University of Miami. That's their art museum at the University of Miami. So he comes down and he hangs the show. They're helping him hang it. And he has an empty wall, completely empty. And he said, what am I going to do? I didn't bring enough stuff. So he calls up Dorothy Blau, his art dealer here in Florida. He says, what am I going to do? And she said, call up Steve Weiner, because he has a bunch of your seriographs. And at the time, I didn't live that far away from the University of Miami. Actually, I lived about a half an hour away. And so I get a phone call, and it's Andy Warhol. Oh, yeah, this is Andy Warhol. Yeah, sure. Who are you kidding? No, this really is Andy Warhol. I said, no. No, Dorothy Blau told me to call you. Now he's got my attention, because he made the key word, Dorothy Blau, the name. And he said, I've been told that you have a lot of my seriographs. I'd like to borrow them for this show. I said, sure, come on over. So the Lowe was there within a half an hour. They probably were ready to go, because the show was going to start in about 3 hours. And we were attending the show. I was looking forward to trying to meet them. So they hang up our artwork in the show, and they had 3,000 people. They couldn't fit 1/3 of those people in that art museum. Couldn't fit 1,000 people at one time. It was a mob scene. But I get a phone call from him the next day, and that was the opening day, and now we're the next day. I get another phone call from him. He says, I'm calling to thank you. I didn't get to really spend any time with you, but I really want to thank you. I would like to have lunch with you at my studio. Well, he didn't really call it a studio. It was called, not the warehouse, the factory. It's called the factory. And it was an old factory in New York. So 2 weeks later, I'm flying up to New York to have lunch with Andy Warhol. And I'm telling everybody under the sun, I'm having lunch with Andy Warhol. I'm having lunch with Andy Warhol. Okay. 1-to-1. So everybody's asking me, giving me, well, ask him this, ask him that. And I had a brother-in-law who at the time was a major developer in the state of Florida. He's dead now, but major developer, developed a small little development in Palm Beach County with his partners called the PGA, which is 5 square miles. And so my brother-in-law said, look, you tell him, and the PGA is the Professional Golfers Association. Mm-hmm. So I said, you tell him to do the 10 best golfers in the world, do images of the 10 best, and I'll have the entire suite of 200 of the times 10. I'll have them all sold. He'll have them all sold before he even produces them. So I'm thinking, I got a real flower in my cap, whatever. So I get there and I ask him my questions, and the answers are yes, no, and maybe. I thought I had about 2 hours worth of information to be asked and answered, and we were done in less than 15 minutes. It was the most uncomfortable lunch I've ever had. And about a year later, they had a movie, I Shot Andy Warhol. And I'm trying to remember the rock star who played Andy Warhol. Anyway, and my wife and I are in the theater, and there may be 4 people in the theater. There was nobody there. And they have a reporter asking the rock star, Andy Warhol, some questions, and he's answering yes, no, and maybe. And we burst out in laughter because that's exactly the way he was. I mean, it's not even a question. But he was very appreciative. And about 2 weeks after I got home from that lunch, he calls me up and he says, I've got 10 paintings. You have bought the seriographs for that suite, but I want you to have the original paintings. And I said, I don't have that type of money. And there are 10 of them. Now, they're not real big. They're about the size of the painting that's behind me right now, which is not my type of art. Again, I'm in a rental for about 3 or 4 more months, but I didn't have the type of money. But I had clients that had the money. So I called up one of my clients who became a dear friend also. And I said, if you put up the money, I will borrow on my house, but it's going to take me 6 to 7 weeks to get funded. And I'll put up my half, but it'll be 6 or 7 weeks. And there are 10 pictures. I get the first choice, you get the second, I get the third, you get the fourth, etc. And we bought them. And we gave back 7 of the 10 to Dorothy. Dorothy resold them, literally resold them within 2 days. We made a little profit, not a lot, but a little profit. He ended up having, I kept 2, he kept 1. He ended up having his for free. And I ended up having to pay under $20,000 for my remaining share that we had to come up with. And so I didn't have to go in mortgage finance. And those paintings, when he died, went up tenfold.
Wow.
Yeah. So there's money to be made in art, but it's very scary. And the prices then went down a year later. So it's like anything else, right. It's like real estate too. Sometimes it goes up, sometimes it goes down, but overall it does go up.
Well, You'll never see that kind of painting again because the person that painted it passed, and it's a unique item. So what an incredible story. It's funny how you met him. That's how he was. And then he gets up on stage and he speaks, and that's the same guy that, you met.
That's him.
That's him. That's incredible. But it's amazing what you could do in your business, real estate, but it's also amazing how you have that side business, well, not business, but your hobby. And
not a business. It's a hobby.
Hobby. Exactly.
It's a hobby
right.
Situation.
For sure. Well, Stephen, thank you so much for being on the show. Thank you for providing all the valuable information on 1031s and just the basics too. And you dive deep on some topics as well, some deep questions. I mean, there's so much to learn about it. Any investor, realtor, or anybody in the real estate industry, it could be huge for them. So again, who do you want reaching out to you? And we'll just keep putting your contact info there, but who are you looking to connect with?
Well, certainly the person that has the opportunity to become an exchanger is our client. The referral sources for us are attorneys. I would probably have to say that it's a third, a third, and a third. Well, 30% attorneys, 30% CPAs, because they know that we know what we're doing and they want to make sure that their clients are protected correctly. And 30% realtors. And then probably 10%, believe it or not, are our clients. Not that they're coming back, they are. But I'm talking about as referral sources. And they're referring to their friends and family. So those are the people that help us grow. And it's wonderful. I mean, I have one guy, it's been 19 years, and we've done, I think, 5 different 1031 on 5 different properties. And on 2 of them, they've resold them and done 1031s again.
Amazing.
So, yeah.
Well, you're going to have a bunch of people reaching out to you. I know that for sure, because the investment community up here in Jacksonville is huge and throughout all Florida. I mean, with everybody even coming to Florida, there's a huge opportunity with investment property. So thank you so much again for being on. Final word?
If you hear that 1031 is being attacked, go out and try to support it. It's not a trick, and it's not something that should be taken off the boards. It's something that helps the individual investor, and it does help our economy too. Last words.
There you go. There you go. Thank you so much, Stephen. I will make sure this goes out there. This will be on Spotify and iTunes and all the Facebook pages and all the groups. So thank you again so much for taking your time. 40 years in the business. You're up on a show with me, the Young Spring Chicken, almost 9:20 at night. So I really thank you for taking your time, and you'll be getting calls. I know that for sure.
Okay. Thank you, pal.
All right.
Have a good one.
All right, everybody, if you want more content like this, make sure you check out the Al Nicoletti YouTube channel, the Al Nicoletti Facebook page, the business page. All these episodes with all these incredible guests are on Spotify and iTunes. Make sure you check out the Al Nicoletti Show. I got just tons of content out there on the YouTube channel, Facebook page, all the micro clips that are dropping out. So make sure you check that out. You'll find all the prior guests and guests that are still dropping from things I've recorded before. It's just the live show is now, and then the live show will be dropped later in the year. But make sure you check out all the content, and I will see you next time on the Al Nicoletti Show. Take care.